Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton. Thank you very much for joining me. Well, to begin with the silver price action over the last couple of days, especially mainly Thursday and Friday. You can see here the market retreated to a minor pullback before escalating higher and now looking towards the target, which is lowered from around 17.35 to 17.15.25. Let's reassess from there, purely for the fact is that if the market does hold to this technical bullish stance, we could see $17.15.25 taken out and look on towards 17.5 as a potential target. Any pullback on the day should find support mainly from this level around 16.5 to 16.60. Moving on with gold, well, the market clearly has reclaimed some of its losses from Thursday as we now look towards the initial target for today, which comes in at 58, although we have seen a high of 57. This could progress further on towards 62 to 70.72. Any pullbacks in the short term should find support coming in now at 49 and firmer from 44 to 36 to 38. But overall, I still feel the market can easily claim that 70.72 target, while this technical pattern still remains bullish. Well, as you can see here, the Australian dollar still remains towards the top side of the range as it looks towards that resistance of 65.90. Last week, the RBA monetary policy meeting didn't really say much outside the warning of us on the risks associated with the build-up of the Australian household debt. What did surprise the market last week, though, was the employment figures released last Thursday, which came in better than the forecast of 4.2 and actually rocketed up towards a 36.4, with the unemployment rate dipping to 5.7, well below the estimate of 5.9, which was forecast. So with little economic release for this week, the market will likely look towards technical levels and also indicators. Although we have witnessed a choppy session throughout the last week, the Australian dollar may continue to trade in a frustrating fashion. However, still look for the move away from this 90 resistance, with the immediate support coming in now at 73.80.95. Now a break beneath there would give further scope to the downside of 73 cents and reassess from there. If on the other hand we do see the market take to a bullish stance and clear that 74.90 level, this would trigger stops up towards 75.40.45 to maybe as high as 75.90, but I don't see that at the moment, and I still feel that the market will be contained by this downtrend. With further gains on Friday for the euro, as we look at the weekly outlook, the upside target may now come in towards 112.30 or even higher towards 112.80 figure. Now, purely behind this is the fact that the dollar index is still weakening and still with further uncertainty to the outlook of the US, the market will likely remain fragile. Therefore, let's take it one step at a time. Let's see how the market plays to the start of this week and see if the bullish implications can clear 112.30 and look towards 112.80 figure. Now, a break above there will give further exposure and maybe towards a 114.40.60 target. However, I'm still on the neutral side as I'm a little bit uncertain in terms of how this market will play out towards the top side. What would reverse, though, if we see a move now from 110.70.90, then this actually would give further exposure to the downside and could reinstate a target of 110.20 or maybe lower towards the 109 region. Well, dollar yen still holding above this 110.05.15 level, and at the moment could still see further pressure on this level. What I'll be looking for is a break of this level to target them possibly around that 109 that we saw back in early April, or maybe lower down towards 108. For the meantime, though, the resistance comes in at 111.60 and capping at 111.90.05. But technically you can see here the market is holding to a bearish stance, so I still expect that pressure to hold towards that 110.0515. Well, as we look at the weekly outlook also for the pound, the market is broken above the 130 handle and sustained, mainly partly from the unexpected rise in the UK retail sales last week, which inspired the UK pound to rally on and now look towards a resistance of 130.4060. From comments of last week, I did mention that a bull trap may have been laid. Now, a bull trap is when the market rallies on from a trend and catches the bulls off guard as it makes a false top and eventually turns away from that level and collapses back towards the downside. Initially, at the moment, I'm looking at a range of 128.70.75 to 128.40.60. Now, unless we go through the top side, then I'm still holding that view down towards the bottom side of the range at 128.30.45 and reassess from there. However, in the unlikely event we do get a break above that 130.60 level, this will bring in a target of 131.40 and higher towards 132.35.45. So do be very on the guard in case this level breaks to the top side. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a great day to the start of this week.